Everyone, it's Jack here bringing you another trade of the day. This one for Wednesday, the 10th of August. And once again, we're looking to play Swiss from the long side. As opposed to the Swissy yen we've looked at the last couple of days, we took a trade in dollar Swissy short yesterday. The Swiss has been looking strong against the dollar. WAM relative strength was just over 20 yesterday, so it's trading relatively close to its recent lows. So that's something that we very much like when picking out a market. Also, daily momentum was robustly emerging down, so that's a really good thing for us to have on our side as well. Now, when we came to enter the market, we were already in both daily and ID1 breakouts confirmed down, so that's a really positive thing. So on the left, we have the ID1 chart, and on the right, we have the ID2 chart. Pretty much same as every day. We cycled down to the ID2 to take this on an ID2 background. Benefits of that being that you can use a tighter stop. The risk, of course, being that you're possibly more likely to get stopped out. However, given all the higher time frame factors I mentioned, this is a market we really liked to get short. On the right-hand chart, you'll see where my cursor is, just here. We entered on the open of this bar. It's particularly when the momentum's strong, you often do want to enter on the open of the next bar because it can often just kind of trade there for a few moments and then go. And that's exactly what we had here. Yes, the ID2 value area is kind of wide, but like I said, given the higher time frame factors, I was happy to enter at the open of this bar, and we sold 95 the figure. Took half the ID2 period ATR as a stop, which was 8 pips, and we were shooting for the ID1 breakout target down here at 94.60 for a 5R target. So a really nice risk reward on this one. Other thing to mention before I scroll across is that we did have the US inflation data coming out yesterday. We were front running that by a few hours. Now, I wouldn't have taken a trade in dollar Swissy close to the number. And in fact, had we been still in the trade around break even or slightly at a loss, I would definitely have looked to close this out, because with those major numbers, you can easily get wicked out or potentially even stopped out with slippage. But given that by the time the figure came out, we were already about 3R on side, I was happy to stay in this one and take the risk. So the data came out weaker than expected, which put pressure on the dollar. All else being equal, just reduces the pressure on the Fed to be as aggressive as they have been with their tightening cycle. I definitely still believe they will keep tightening given where inflation is, but nevertheless, it marginally reduces the pressure, at least in market participants' eyes. So we had an order resting at 94.60, and as you can see, if I keep scrolling across here, I'll just adjust the scale. As you can see, the market just blasted straight through that. So we actually got a fill 13 pips better. So instead of cashing in for 5R, we cashed in for 6.5. So that's a really great winner. You can see here that it doesn't happen very often, but the vol bands indeed were getting hit repeatedly on the way down, signifying that the market's moving a really rapid distance in a very short space of time, or a far distance, I should say. So yeah, we got out for 6.5R on this one. The market did indeed continue to sell off, but we were happy with our profits on this one. So that was a really nice trade. Wishing you a pleasant day. I'll be bringing you another trade tomorrow. Take care.